Carl Larry, the Director of Energy Derivatives and Research for Blue Ocean Brokerage. Thanks for joining us this evening. You have that crystal ball, Carl. What can you say about the oil price based on the OPEC report, the downgrade in U.S. supplies, etc.?
Yeah, the thing to remember here is that even after the IEA release, even after, what we're looking at, it seems to be moderate demand. We're still seeing oil prices here in the $95 range, and they still want to go higher. So there's a good investment here that's following the markets higher. And I think just like T. Boone just said, that $100 is probably inevitable, and maybe even higher than that, depending on if we get by without any really major disruptions.
So we had the OPEC report overnight, Carl. We had, of course, world oil demand to grow at a slower pace for the second year, but also the U.S. Energy Department downgrading or cutting its crude price forecast. Which of those two, if at all, rattled the investors' nerves, or which one caused more of a ripple, if you like?
Well, OPEC's always interesting. They tend to be a little bit conservative on their calls for demand and/or their own production. So seeing what they said in the report, that they're looking at about 30 million barrels a day right now, and that again is considering that the rest of the world is just doing okay. We're not seeing any great strides outside of China. So if they're at 30 million and their spare capacity is anywhere between 3 to 5, there's not really a lot of room to give if we have to go higher. So it's interesting to see that even with OPEC being a bit conservative, 30 million barrels a day is a big number.
They didn't really go into the Middle East, North African concerns. They just talked about Asia growth, didn't they?
Yeah, they didn't. They didn't speak anything about the Middle East problems, and they did say that there's some risks for unforeseen problems, but they're not addressing what's really going on there. Obviously, the recent issue with the IEA and OPEC butting heads here caused a little bit of a rift, and that could be something that we're going to look at going forward if there's any more contention here with the oil prices at $100.
What impact, Carl, has the IEA announcing more supplies? Of course, the US accounts for half of that. What impact has it had now, a few weeks on from that experience, on the oil market itself?
Well, I think the IEA is going to come out later today and talk a little bit about that. But it's really interesting in play because the IEA seems to be turning back a little bit of that oil that they released. The emergency stocks, there's not really a demand for it overseas. But we already sold the crude here in the U.S., so the market was pretty much flooded here in the U.S. with 30 million barrels, and we didn't really see that much across the pond there. So, it's starting to seem like more of a political action than it really was an emergency action. So, it's going to be interesting to see what they have to say later on today.
Now, in your notes to me, you said, in fact, diesel fueled the demand. Onus now on refineries. Now, the concern for the U.S. is aging, isn't it?
It is. It really is. And that's one of the things we're going to have to look forward to. And I think OPEC made mention of that, too, in their report, that as Europe grows, as Asia definitely grows, their demand for distillates and fuel oil is going to be much higher than we see for gasoline here in the U.S. So that's going to be something that's going to be a concern going forward. If we see oil prices rise, we're definitely going to see diesel prices rise, fuel oil prices rise, mainly transportation fuels just in general.
So, Carl, a final question for you. As the head of energy derivatives, what is the best way of playing this oil price right now?
Well, I think that no matter how you look at it, as oil comes down to the $90 level or maybe even below that, it's a buying opportunity. The way you look at it here is that if the dollar goes up, eventually it'll mean stronger demand in the U.S., so we'll see more demand for oil. If the dollar goes down and the euro stays strong, we'll see more demand out of Europe and Asia. So either way, it just go long and go strong.
Great way to end. Go long, go strong. Carl Larry there from Blue Ocean Brokerage there, joining us from New York City.